We like the stock. Microsoft, our strategies hold the stock, and in that beat of $1.13 versus $1.08 looks like about what it's been doing the last 3 quarters, which is substantially beaten the EPS estimate. So we're good with it. It's a good holding for us, and as you said, up over 20% this year.
Kevin, what's your view on Microsoft?
These are great numbers. It's a core holding of mine. It has been for a long time. 80+% growth in cloud. And there's another aspect that I'm holding on to here. The gaming side of this company, their ability to move it all on cloud to subscription service and become a ubiquitous platform globally in gaming, is a potential that not many people talk about, and yet the company continues to move in that direction. I think that's why this stock will actually expand its PE in the next year. It'll start to trade as something different than a dino tech that it used to be. Remarkable trends, a change, an absolutely incredible change in the last 3 years by management. Amazing transition, amazing.
Okay, Kevin, gaming revenue in fourth quarter increasing 39%. So there you go on your gaming revenue. LinkedIn revenue increasing 37%. They've got some nice pockets of double-digit growth, Mike, and I'm sure they'll be asked on the call about GitHub. Remember, they acquired that company last month. About this new deal with Walmart. They're teaming up there to go up against Amazon, arch rival in the cloud.
Well, they're using their advantage and their cash to essentially assemble these sort of mini empires within the company. And it's interesting because the street's giving them credit for and allowing them to do it, right? When LinkedIn deal was first announced, nobody really saw how it fit together, and people said, well, the cloud's growing so fast for Microsoft, we'll let them sort it out and explain it to us later. I think that's what's happening in a lot of these areas. When it comes to gaming, that's becoming more of a surface story. I don't mean that as a pun in terms of their wireless devices, but it's really now, I think, getting talked about more when it comes to Microsoft. On the other hand, many companies are saying they're going to be the Netflix of gaming. It's going to be a great services revenue growth model.
Kevin, the stock is now back to flat, having been down about 1.5% when the numbers hit. More broadly, whether it's Microsoft or the other tech companies that have reported so far, how are you feeling for earnings season and some of the other big names still to come?
It's very hard to find a sector that has pockets of growth in the 70 and 80% in any other sector of the economy. Remember, we were waiting for the transition to leadership to go to financials since January. That has not happened. I think I'm going to stay the course in tech and stay the course in small cap to get the full benefit of deregulation and the new tax reform cash flows, which haven't been calculated yet because the tax code is still being developed for those small cap companies. So for me, nothing's changed. And yet, we talk a lot about rate hikes. Look at the 10-year. It's exactly within bips of where it started at the beginning of the year. So I think we could have a pretty good end to this back end of the year if we just stay the course on growth in tech and growth in cash flow in small cap. That's my plan.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.